Hi. So good to be with you today. I did an interview of my 14-year-old daughter for an upcoming episode of this podcast. And I realized that I didn't give enough background on one of the things we talk about in that interview. And so I thought before I air that interview with my daughter about money, I thought I would bring you a really great life hack that has to do with tax advantaged savings for your kids. So let me talk about that today. And then that way, next week, when you hear my interview with my daughter, you will understand and have more context for one of the things that we talk about. All right. So, for those of you who have kids, or if you have young people in your life who you care about, maybe you're a teacher, maybe you have godchildren, etc., listen up. There is a wonderful, really, really cool thing that you can do, which is to open an IRA for the kid. Okay? So, as a parent, one thing you can do is you can open a custodial account, a Roth IRA that is a custodial account. So your kid can't control it until they're 18, but after that point, it's theirs and it's their money, right? So one of the most advantageous things that exists in the US tax code is a Roth IRA for a minor, okay? So I want to just explain to you why this is such an incredible deal. And it's something you can do for your kids. And the reason that I'm bringing this up is it's the summertime, right? Some of you have kids who have a summer job, right? I do. And you might have a kid who's just started babysitting. Maybe they're doing some dog walking, some lawn mowing. Maybe they started a little business, right? So let me talk to you about a Roth IRA for a kid. So first, to just set the baseline, what's an IRA? If you've listened to this podcast, you've heard kind of the details on that, and I'll link to an episode where I clarify that. But just the quick basics on an IRA. An IRA stands for an individual retirement arrangement, okay? It's controlled through you, that's the I in IRA, individual, not through your workplace, okay? And an IRA stays with you no matter where you go, no matter where you work. There is an annual limit of contribution allowance you can put in every year, and that amount has a tax advantage, okay? So the really important thing to know is there's a difference between a traditional IRA and a Roth IRA, and basically that just tells you where the advantage comes, right? In a traditional IRA, you put the money into that account, and all that money that you put in comes off your taxable income for that year. In other words, it saves you taxes on whatever amount you put in to that IRA for the year, right? Up to the maximum that you're allowed to for the year. When you withdraw the money, presumably decades later after it's been growing inside investments, then you pay tax at ordinary income tax rates when you take the money out. Okay, that's how a traditional IRA works. Okay, now in a brokerage account, if you just put that money into investments, you would be using taxable income on the way in, and then the money you took out on the back end would also be taxed. So the traditional IRA is sheltering the taxation on the way in. Now, a Roth IRA flips it, okay? When you have a Roth IRA, you put the money in up to the annual limit, but you don't get a current tax break, okay? So you're going to be putting in money that you pay tax on for that year. There's no tax savings the year you put it in. However, one of the coolest things about the Roth IRA and why it's so wonderful is when you take that money out, there is no tax at all. It is one of the only places where you can save taxes on an unknown future tax rate. And in the world that we're living in, especially one like where we just passed this one big, beautiful bill, which I don't think is beautiful at all, you can assume that tax rates will go up in the future. They're going to have to cover the deficit that we just got stuck with, that our kids just got stuck with, frankly. So a Roth IRA is a really wonderful way to know for sure you've paid all the tax you're ever going to owe on that money. And when you take it out, it will be tax-free. Okay? So one of the really interesting things about a Roth IRA is that a minor, a kid, is allowed to have one so long as they earn income. That's the rule. They have to earn their own income. You cannot just max out an IRA for your kids, right? But if your kid is earning money, they can put that money up to the limit for all people, right, including minors, into that IRA for that year. Okay. So it's also okay if you have the ability to do this, you can match the money that your kid earns and put that amount into an IRA on their behalf up to the amount that they earned or the limit for the year, whichever is lesser. So you can match the money that they earn and put that into an IRA. That's okay. All right. You just can't put more than they earned or more than that annual contribution limit. Okay. So I have taught my girls about how this works, and I've also taught them about compound interest, which is, I think, the more exciting part. So it's also important to know that a Roth IRA or traditional, basically all tax advantaged accounts are just a container, right? You're not just putting money in there and that's it. You actually have to have the money that's in the container, in the IRA. It has to be invested, right? So you open the IRA, you put the money in it, but then you also have to take that additional step of choosing what investments that money goes into. Okay. So, I'm not going to give you investment advice here. I can't, I won't. This isn't investment advice, but I usually just do a basket of index funds, right? Low cost index funds is what I'm driving at. And, for an adult, I would diversify and put in some bonds and maybe a little real estate, diversify that portfolio. For a kid at this stage in life, I'm going very aggressive into just index funds in stocks. So that is the baseline that I just wanted to teach you about. And now let's talk about why it's such a big advantage for a kid. So the thing is, when you have a Roth IRA for a kid, their income tax rate is probably 0, right? And so for most kids, if they're earning under the standard deduction amount, that kid, they're paying full tax on money that goes into a Roth IRA because their full tax is 0. And then when they take the money out, presumably decades and decades down the line, because the wonderful thing about being a kid and having a little bit of investment money is that there is such a long time horizon under which that money can grow. Okay, so when that kid then takes out that money, which has been growing a little faster than any other money they have because it's inside this Teflon container that suppresses the effect of taxation on the investment returns. When they take that money out, it's also tax-free. So what's so fascinating about the kids' Roth IRA is most kids will never pay any tax on it. This is perfectly legal. It's perfectly wonderful. It's a wonderful, cool thing you can do for your kids. So, of course, knowing this, I'm doing it for my kids. This year happens to be a year. My oldest daughter last year started babysitting for the first time. It was the first time she had really started earning income. And I was like, oh, ding, 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 we can do it. We can do it. This is the year. So I started a Roth IRA. I had to teach her what that is and why it's exciting. And I also, she didn't earn all that much money. I just decided to match the money that she earned and then also use it as a teaching opportunity to show her what a tax advantaged account is, what investments are, what index funds are, and then show her what compound interest does to your money. This is really exciting for a kid because you can compare that timeline of growth for you, as a parent versus for your kid. And the kid is going to see, oh my God, I'm going to be a millionaire. With this, $1,000 contribution is going to turn into a lot of money in 60 years, right? My daughter was very excited by that. So that is the takeaway that I want to give you today, just that this is an option to explore. It does give you a little bit on the technical side. You're going to then need to report and pay some Social Security tax on the earnings that the kid brings in, so that you might now have to do more stuff for that kid on your tax return the next year. That's a thing. So be aware that there may be some little bit of implication on that side. But in general, it's a great teaching opportunity. It's a great way to sit down and have a conversation with your kid that is actually really optimistic and positive. It gives them a sense of control because it's something they can do, right? It is something that they can plan for. It's really a way to give that next generation that this tax bill has just absolutely screwed over. It's a way to give them back some power and some control and some agency and a sense of hope and the ability to take things into their own hands. So I hope that's helpful for you. If I'm talking about compound interest and you're kind of feeling lost, you're feeling like, oh, shoot, you know what? I didn't get that sort of basic financial education to really understand what that means. Don't worry about it. I got you. I also did not really have the memo and that for a long time in my life. And so I just wanted to let you know that in the free class that I give often during the tax season, called Make Your Taxes Simpler and Stash an Extra 152K in Your Savings. In that free class, I have a really good explanation, including a graph, like a visual of how compound interest works and how it grows your money, right? This is the way that your money is moving when it is in investments inside a tax advantaged account. So if you want to see my explainer about how that works, you can sign up for that free class. It's free. You feel free to skip ahead. That's totally fine. It comes within the first 30 minutes. It's a 1 hour class. That explainer comes probably around minute, I'm not sure, but probably around minute 20 or 30. So feel free to get that. You can get that class at go.sunlighttax.com/register. I'll put a link to that in the show notes. But again, it's go.sunlighttax.com/register just to see that class and get my walkthrough of how compound interest really has so much power to build wealth for you. Because I think a lot of us never got this memo. Also, P.S., if you do watch that class and you're like, oh, wait, she's talking about this program that she has and it looks really great, all of that is totally open. If you decide, if you watch that and you're like, oh, shoot, I'd love to join this, you absolutely can. And watching that class does give you access to the very best deal that I offer for Money Bootcamp. So if you happen to be interested, this is no pressure at all. If you happen to be interested, the deal is good. You can absolutely join. But mostly, I want to just show you that that is a really good walkthrough of compound interest. Okay, so what I want you to take away from this today, if you have kids, if you have godchildren, if you're a teacher, you have students, if you have young people in your life, this is a really powerful tool that they can use for future financial security. It's a really easy sell in a way, because the sell is you can be a millionaire with quite a bit less money than $1 million. You can take a little bit of the money you have now, squirrel it away, do this special thing, put it in this special container, and it will become, it will double and then double again and double again. That's what compound interest does. This is how to be a millionaire. And you, as a young person, have a bigger advantage than I, the adult who's teaching you, do because of the timeline. So it's a really wonderful, powerful teaching tool for any young person in your life. And please share this episode with anyone you know who's got kids, who have a summer job, teachers, etc. I feel really called to make sure that young people have access to really great information about their money, and this is a tool that you can share. So I'm grateful if you decide to share this episode with somebody who needs it. All right, so check the show notes for all the links to that free class with the compound interest explainer, further study on Roth and traditional IRAs, and I hope that you can help me empower the next generation, maybe even yourself. All right, I'll see you next week. Bye. Thank you for listening. If you like the show, please be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available for pre-order at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.